Here's one sort of no-name stock that is on my radar for a bullish setup for this upcoming week. The stock is CVAC, ticker symbol CVAC. It appeared on my radar because of this setup right here. We had price action selling off now ever since it's IPO'd, and we had that first sign of a bullish momentum cross. This blue dot right here signifies that the 3 EMA is crossing above the 8 EMA, aka the bulls are starting to take over control. Now that led to price appreciation, and after that you had price pull back and you had the bearish momentum cross right here with this pink dot. Now the reason this pink dot stands out is typically when you see bearish momentum crosses, meaning the 3 EMA closing below the 8, you expect to see that with a red price candle. That's because you expect the momentum to be bearish. Take a look at an example from the past right here. You'll see a pink dot with a red candle right here. Take a look at some other examples right here and right here. So this should stand out right off the bat, this pink dot with a green candle. That should tell you that, hey, this might be a false signal, a breakout, or false breakout, excuse me. Now after that, with this previous week's candle, we had the bullish momentum cross, the blue dot. That tells us that, hey, now the bull should resume control of price and continue that original move back in the bullish direction. Now, if we draw this out as a price channel, using these lows right here, extrapolate that for the upper end of this price channel, that gives us an upper end target of about $5 for where this momentum could take us. The midpoint is closer to that $4, $4.50 mark. Now, using all of those price levels, if we come inside of the trade tab, you should notice that the implied volatility here inside of CVAC is extremely high, more than 100%. However, the actual IV percentile is less than 50, just at 38%. That tells you that while implied volatility right now is very high, traditionally it's a lot higher in the stock, but you can see that as a result of course, if you zoom out, this insane price action where the stock has essentially just been beaten down. So we're trying to ignore this IV percentile while still taking advantage of relatively high implied volatility levels. Now on the put side, there doesn't really seem to be anything that's too attractive here. Also, it's just the 16th August and the 18th October series that I'm paying attention to. The September ones currently have zero open interest across the board, so I've just collapsed it. Now, if we take a look at the strike with the greatest open interest, that's this strike right here, and that's the $5 strike in October. That's the same $5 price that we were talking about as a potential upside target. Stock's currently at $3.67. Now, using our wheel options calculator script, which by the way for all Volatility Box members is a free download included with your membership, we can see that if you were to sell this $5 strike price, you would earn nearly a 15% return just from the premium if you do get that $60 mark. We don't really know what this other side is right now with the markets being closed, so let's assume you get $60, about a 15% return on the premium. Now, if your shares do get assigned and taken away from you, that jumps up to a 51% return, which is where I think CVAC looks very interesting, because for that to happen, all we need is for price to essentially get towards that $5 price mark and exceed it by October, and currently we have momentum on our side. Now, in case October was a little bit too far for you, if we come into the August series instead, where you can take advantage of data decay being under that 30 days to expiration curve, we take a look at the strikes here. We have two different strikes that stand out. The first is the $4 strike, and this one has the greatest open interest. The second strike is that $5 strike, the same number we're talking about. Here, we're starting to get a little bit more volume, and the open interest is still below 100. I'd like to see that above 100, but you get an idea of what that premium is that you might be able to collect. Less than what we saw in the October series, but you take a look at the percentages, 12.63 for the $4, 6.54 for the $5. This is just for the premium. And if the shares do get assigned, that $5 one is still very attractive at that 42% return in just, 26 days. So there you have it. This is a setup inside of CVAC, a stock that normally would never hit my radar, but is one that triggered on the scanner today, and just a handful of those as well. CureVac was found from a very small list. The other stocks on this didn't look as interesting as CureVac, especially with this false breakout signal. So I thought I'd share it for those of you that have maybe even smaller accounts or accounts in which you're looking to run the wheel options on. You might find this to be a good candidate for that play. Take care, everyone. Good luck trading, and I'll see you in our next update.